Hello everyone, Professor MoneyPigTrading, September 24, 2022. We're going to take a look why the shipping stock ZIM, ticker name ZIM, and other container shipping stocks dropped so much in the past 4 to 5 months. So really quick, we're not financial advisors, so please invest at your own risks. So let's take a look at ZIM on the left side. That's the daily chart. So back to year to date, back to February, the ZIM was actually traded all the way to the all-time high, $91 when they actually going to offer $70 per share of dividends. And ever since, had a pretty heavy pullback once the dividend was given out from 91 to around $55. And then ZIM was just popping back to 70 and then all the way down to on Friday close 24.87. Of course, on the meantime, S&P 500 SPY was actually down a lot as well. Right now on Friday close, it's actually hanging around 361 all year low. So definitely a factor that the general market is going down. However, ZIM is actually pretty heavy. And if you don't have enough time, we just want to give a quick highlight. Basically what we thought and what we think right now is ZIM had room to $40 to $50 because of his current healthy financial statement and a pretty big upcoming dividends potentially in March 2023. So temporarily in March 2023, we think ZIM can actually push out to $40 to $50 per share if S&P 500 can hold up. Last our ZIM video was made back to about 6 months ago. Unfortunately, I had some family health issues, and I personally have a wedding too. So I was not able to make another video in the past few months, but we try to keep everyone updated about our ZIM position, try to be as transparent as possible. So we posted on our YouTube community post and also Twitter and Facebook. This is our Twitter post. Back to March 18, we did mention that we actually take out all the ZIM long call options as a swing trading. And when it was traded at $90 per share, we actually take out one half since our average is around $45 per share. So take out one half at 100%. So the other half is kind of free ride. And at the end, we actually closed out the last position at 61 just to protect our profits since ZIM actually dropped quite a bit after the special dividends back to March 2022. So just want to highlight that our update, and hopefully you guys were able to take the profits. So before we go to ZIM, really quick, our partner Piggy Cards is actually offer a 400 plus of discounted gift card. They have a really big discount, like outdoor activity brands like REI and LL Bean. They actually have 7% off. So feel free to check out down below. We actually have a referral link. Sign out to get $100 credit, so we can help you save more. They also have pretty big discount on Macy's. They have 8%. And the best part of their gift card is they're all digital, but can be used in physical stores, and then they actually take any monetary value on their gift card in a given range. For example, REI, you can just buy $238.30, so that can maximize your discount on each purchase without any cent left after your shopping. So really great platform. So come back to ZIM. Amazing 2022 Q2 earnings. The guidance is in line. So the Y-X is the net income in $1 million. The axis is basically each year. And as we can see, ZIM had a very successful IPO from the $10 per share to $90 a share, as we mentioned in many previous videos. Q1 this year, they actually provided 2022 guidance with a net income of $5.11 billion. And so far, just by 2 quarters this year, which is the green bar over here, they actually generated $3.05 billion of net income. So basically reach about 60% of its guidance. So that's why they're so confident that the guidance they provided earlier this year is still in line, even though the shipping price actually dropped so much that we're going to mention. And if you're not very familiar with the ZIM business model, just to give you a really quick review, their net profits is actually all from container shipping revenues. And because they rent all their ships, or pretty much all the ships, they only own a few ships, compared to other container shipping firms like Matson, MATX, which own most of their own ships. So they actually need to minus a lot of their ship rental costs or chartering costs, which is mostly what they pay for to rent the ship. And back to the revenue part, because they sign a lot of contract and renew those contracts each year. So 50% of our contracts are shorter term, and they are highly correlated to the current shipping rate in the market. The other 50% is a long-term rate that they lock in a contract with other clients for the 3 to 5 years. So that's why ZIM has been so powerful in the past 1.5 or 2 years when the shipping rate go up crazy because of the COVID-19 and all the supply chain issues. However, when the shipping rate drops so quickly right now, ZIM's business model will get challenged really badly. And that's why ZIM has been outperformed in this downturn cycle compared to other container shipping firms. So let's take a look at the current container shipping rates. This is from the Shanghai Containerized Freight Index. You can see this year, as highlighted on the red box on the right side, you can see 2022, the shipping rate is like going all the way down right now. And we actually highlight the same time period last year on the left side. And you can see the shipping rate is actually lower than the year to date, compared to last year, YOY. And they actually continue to drop without an end because all the economy fundamental issue, people are worried about the hard landing, recession. Europe and China are doing pretty bad right now. And the other chart we have been showing to our followers and our Discord community members is this retailers inventories to sales ratio, which is provided by US Federal Reserve. Basically, this is a ratio on the y-axis, and the x-axis is each year. The higher the number, that means there are more inventories for the retailers. And we can see this number continue to drop starting in 2020 when COVID happened because there's a lot of supply chain challenges. So a lot of shipping rates just go up like crazy in the inverse way. However, we can see starting January this year, this chart started bottom and this number started to come out. That means a lot of retailers started to get their inventories refilled, even though the inventory level is still not back to the pre-COVID level. So this chart is also telling us that the shipping rate will continue to drop until this inventory to sales ratio come back to pre-COVID level, which we still can see about 20% increase from here. And not only looking at ZIM itself, we also have to look at ZIM's customers, like a lot of retailers, Walmart, Target. And they all report 2 consecutive bad earnings in the past 2 quarters. So retailers have been showing that they are slowing down with extra inventories. I don't know, guys, if you remember, everything is a black swan this year, right? Back to May, we have Walmart lower the guidance, withdraw the guidance, Target lower the guidance. This is a Target example back to May 18, 2022, when Target reports lowered their guidance, and we can see Target actually gapped down quite a lot from 215 on that day market close, and after our Target dropped down to 166. And the next day, the whole stock market got destroyed because it's Target earnings. And Target is so important, right? Just like Best Buy, Walmart, they sell a lot of 3C products and many other products. If they start to slow down, that means the economy is slowing down in the United States. And that's why we're kind of teasing with the dog. That's the Target dog. And we just put a red background because even Target bring down the whole market back to that week. And actually a few weeks ago when Walmart and Target continue to report bad earnings, actually also tanked the whole market, especially on the consumer staple sector. So if ZIM's clients, retailers are slowing down, that means ZIM's net profits will get affected as well. So back to the ZIM guidance they provided earlier this year. I know in the about 3-4 slides away, we did mention that ZIM guidance is in line because just by 2 quarters this year so far, they reached 60% of the net income guidance already. So based on the current trajectory, we still think ZIM can reach the guideline. However, in the guidance they provided in Q1 this year, they do mention the average freight rates in 2022 will be higher than 2021. That is not true already, as we see in the previous slide on the real-time container shipping rate. The gradual decline of spot rate should happen in second half 2022. As we can see in the previous slide, it's not a gradual decline, it's a really sharp decline. And the contract rate will still be significantly higher than 2021. That is not true as well. And because all this negative outcome, even though ZIM can still potentially reach, very likely to reach their 2022 guidance, However, investors in Wall Street now really concerned about ZIM and other container shipping companies' outlook 2023 and 2024 because all this shipping rate drop. And the other problem for ZIM, and also is a good double-edged sword, is ZIM has a massive dividends. In August 2022, in the Q2 earnings, ZIM actually provided a new dividend policy. So similar to before, they provide 30% of our quarterly net income for Q1, Q2, Q3 dividends. However, starting in Q4, which will be distributed in March 2023 potentially, they not only are going to offer 30% of the quarterly net income, but they will also provide, look at the turn, up to 50% of annual net income as a special dividend. That will be the Q4 dividends. So if we look at the numbers, basically that means in 2022 Q3, the dividend potential will be $3 to $4 per share, highly depending on their net income for that particular quarter. And we estimated that dividend will be distributed in December 2022. In the Q4 special dividends that we mentioned, potentially could be up to $25 per share, estimated will be distributed in March 2023. However, because their net income are dropping based on the current container shipping rate, there's a lot of uncertainty for their dividends starting in 2023 onward and 2024. So a lot of market and investors don't like uncertainties, and that's why ZIM has been selling off so badly so far, even though they actually potentially have more than 100% dividends going to be distributed in the next 6 months. So again, double-edged sword. And financially and fundamentally, ZIM is a very healthy stock, currently traded at $24.87, as we mentioned. Have a lot of cash in the balance sheet. They're having 27.5 per share, and the management is doing a great job by liquefying natural gas fueled ships so that they can more eco-friendly and follow the compliance and policy starting in 2023 and 2024 onward. So it's a great management, great company, quite a bit of depths, $37.9 per share of depths. However, like we mentioned in the previous video, they're an asset-light company, so a lot of their ships are rental. When the economy goes down, they can potentially just decrease the number of ships that they rent, and that can greatly reduce their costs. PE ratio is impeccable, 0.5 right now. EPS is $48 per share. Awesome. Dividends we discussed is to be determined based on their net income. The short interest is getting higher and higher. Right now it's 8.2%. So basically, with all this information combined, we still think ZIM is very oversold right now. We do think because there's a really big dividends on the horizon in March 2023. Again, we don't know the exact date yet. We do think if S&P 500 can still start to hold up here, which is a big question mark, we do think ZIM could have a potential to push back to $40 to $50 because the dividend is so massive, right? I'm sure some investors will start to come in and buy the stock for the dividends as soon as the stock market start to hold up. However, that $40 to $50 is unlikely to hold because if the general industry, the shipping rate continue to tank, people would know that ZIM will become it might start to lose money in 2023 and 2024 and cannot sustain such a big dividends. In that case, the $40 to $50 might be just briefly touch and start to pull back again. And we see in the last container shipping cycle, 2008, there was a lot of supply chain issues. The shipping rates was actually skyrocketing as well, and then pull back. And the whole container shipping company, their stock price was just flat or kind of choppy for the next 10 years until COVID hit with a supply chain issue, and then those shipping companies started to come back. So basically, they are a cyclical stock, highly correlated to the economy cycle. So watching the macroeconomic trend is very important when you invest in this sector. So there are some bullish factors coming in the container shipping industry. So there's a pretty big news coming up on the past few weeks that the United States railroad labor had a lot of disputes. If they really had a strike and paralyze the whole railroad system in the United States, that will make the container shipping rate a lot higher because the cargo shortage or congestion will be a lot worse. However, a week or two ago, the Biden administration was able to negotiate with the railroad labor and union, and so that situation just got control at the moment, but we have to keep watching it. For ZIM itself, we mentioned in the previous video, it actually has been negotiating with the Israel government to lower the tax rate. We still don't know when that will happen, but if they are able to lower the tax rate, that will improve their margin and more net income as well. However, there are many bearish factors and black swan in the market, as we mentioned. So Ukraine war is definitely a thing. And also recession, inflation, and Fed just increase the rate like crazy. And if they continue to raise the rate aggressively in the upcoming November and December FOMC, we do expect SPY S&P 500 could drop to 320 to 340. So that's the next leg down for the general market, and that could pull back down ZIM as well. And also the supply and demand in container shipping industry is another major concern for a lot of investors, since there will be a lot more bigger container ship being built and start to supply the market in 2023 and 2024. And if, like we mentioned in the previous slides, if the demand of the shipping is dropping while the supply continue to go up, that means the shipping rate will continue to drop, and that will make ZIM continue to sell off. That's the other thing we have to check pretty carefully if you are invest in ZIM. So just want to highlight, we have a really robust Discord community, long-term investment so far this year. This is our benchmarking account. While the market is down quite a bit, currently this year so far we have 3.24% of a year-to-date positive return. So really outperform the market. If you're interested in our Discord community, feel free to check out www.moneypigtrading.com. And also we keep posting the updates about shipping industry and many other sectors that we have been watching in the social media. So Twitter, YouTube, Instagram, Facebook, or MoneyPigTrading. Thanks for watching this longer video. I'll see you guys in the next video. Bye-bye.